This episode is made possible by NetSuite by Oracle and Brex, the AI-powered spend platform.
This is Jim Cox. I'm the CFO of Clearwater Analytics, and you are listening to the CFO Thought Leader podcast.
This is episode 1025.
So this would not have been the case 10 years ago. We would have been going, ooh, gosh, when are we going to get that data? And by that time, your customer's already taken action and walked out that door. So we're able to understand our customers in a much quicker real-time environment so that we can help support them in whatever they're trying to achieve. So finance has really changed over time, just in terms of access, the speed, and even just the general efficiency of how we run. I don't need as many analysts doing this manual work anymore, pulling, analyzing on a lag basis. We can actually just have dashboards pull in data all the time, and I can quickly look and see what's happening.
Hi, it's Jack. On today's show, we speak with Chikako Tyler, CFO of California Bank and Trust. In her role as CFO of California Bank and Trust, Chikako Tyler faced the collapse of Silicon Valley Bank, the second financial crisis of her career. Unlike the first, the Great Recession, which forced Tyler to leave a rewarding career in commercial real estate, this time, Tyler was prepared to take charge. You'll hear that story and much more on today's episode. We'll begin after this. 37,025-1. These are the three numbers to remember to get the visibility and control you need to make the right business decisions instantly. 37,000. That's the number of businesses which have upgraded to NetSuite by Oracle. NetSuite is the #1 cloud financial system, streamlining accounting, financial management, inventory, HR, and more. 25. NetSuite turns 25 this year. That's 25 years of helping businesses do more with less, close their books in days, not weeks, and drive down expenses. 1. Because your business is one of a kind, you should get a customized solution for all of your KPIs in one efficient system and with one source of truth. Manage risk, get reliable forecasts, and improve margins. Everything you need, all in one place. Right now, download NetSuite's popular KPI checklist designed to give you consistently excellent performance, absolutely free, at netsuite.com/KPI. That's netsuite.com/KPI. Hello, we're speaking with Chikako Tyler, CFO of California Bank and Trust. Chikako, welcome.
Thank you. Thank you for having me.
Yeah, as always, we're going to begin asking you to look back for us. And we're always interested in those experiences that you feel prepared you for this role, this finance leadership role. What comes to mind?
I actually started my career in commercial real estate, and I loved it. I thought I was going to stay in commercial real estate as a career for my life. I enjoyed watching the buildings go up. I worked for a shopping center developer. I worked for REITs, and it was really fun and interesting work. But as luck would have it, the Great Recession happened in 2009 and 10, and all the capital in commercial real estate was pulled. So I was reading the writing on the walls. My job's not going to exist here soon for a while. So I better go find something else until real estate comes back. So I started applying for any job that would be transferable skills from commercial real estate. And California Bank and Trust had a posting for a real estate analyst. I applied for it. I was interviewed, and I was told right up front, we purchased 2 failed banks with a heavy commercial real estate portfolio. it's a liquidating portfolio. So this is temporary. We just want to be upfront about that. And I said, great, because I'm going back into commercial real estate in 2 or 3 years. So I think this is going to work out great for both of us. So I got the job, completely expecting that this is going to end at some point. I'll go my way, the bank goes their way, great. But I started to really enjoy the business of banking. I only knew banking as a customer. You walk into a bank, you do some transactions, great, you go on your merry way. But when I actually started to learn about the business of banking and how entrenched banking is as a part of the economy and how we help businesses thrive, we lend for people to execute on their dreams, it was such an interesting business. And even just the part about just the balance sheet management, you borrow from the Federal Home Loan Bank, how much do interest rates impact our financials? I just didn't know any of that when I went into this job. And when I started to really learn about the business of banking, I thought it was fascinating. So I started to explore other opportunities within the bank to stay here. And I was very fortunate that I was able to move along different parts of the bank. I moved from this, specialized assets analysis, portfolio management, and I moved into risk management and credit risk management and finance. And I was able to have this amazing career journey meandering along different paths through the bank to finally land me in a finance role where I could thrive and ultimately have this amazing career as a CFO. So it's been quite the journey for me, very unexpected.
It makes perfect sense that risk management became your sort of your gateway. But I'm curious, at any point in time, did you try to use outside resources to broaden your understanding of the finance function or?
Definitely. So I do have an MBA, so I do have a basic understanding of finance and accounting. So that's really helped. I have a mathematics bachelor's degree. So in math, you really understand numbers, but you don't necessarily understand business, finance, and accounting. So I was fortunate that I did have an MBA that helped me have this fundamental understanding of finance and accounting. But as you hear from my career journey, you're right. I don't have an accounting background. I don't have my CPA. I find that by utilizing resources and surrounding yourself with people that are specialized in those areas and being very open about learning from them, as long as you have a fundamental understanding, I know enough to be dangerous and I know enough to have an intelligent conversation with my controller. So I've really leaned on expertise of others where I have gaps in my own background. But I also think that I have a much broader, high-level understanding of the business, which helps me drive more decisions, better decision-making strategies beyond just kind of these, siloed functions that I really rely on my team to do.
So I want to point out, you've been in the CFO office that nearly 6 years now. Is that right? And you've been 10 years with the bank. So you certainly climbed quickly into the CFO role. Lots happened in the banking industry over time. Let's ask you about California Bank and Trust now. Tell us about this bank. What sets it apart? What's its unique sort of space?
Oh, sure. California Bank and Trust. So we cover the state of California. We're a divisions of Zions Bank Corporation, which is headquartered out of Salt Lake City. But what's really unique about California Bank and Trust is that we run our own California bank. So while we're a division of Zions, we have our own CEO, CFO, executive management team, and we run like a community bank. Our customers know us, we know them. They have access to quick local decision making, but we have the capital, liquidity, technology, products of an $80 billion bank. So what's really special is that you can come in as a small business. Your banker is going to give you personalized attention as your financial partner, help advise you to grow that business all the way along through any kind of life event, whether you're going to ultimately sell the business, you're going to pass it down to your children. Maybe you want to IPO. We have all the capital markets capabilities of a large institution while giving you this personalized service of a community bank. And I don't think that most banks, most banks are either community banks or they're large banks. And to operate a regional bank with this kind of structure with local access to decision making is pretty unique. So that's what's really exciting is we can have this amazing connection to our customers, but we can take you from the beginning of your life as a business all the way through to the end until you have that event. Hopefully, continue to bank your business, whether you pass it down or maybe it's that next buyer. We can help you get there and then help manage your wealth. So we've got this entire suite of products that you will really never have to convert your bank again. You do it once with us, and we are going to help you through the life of your entire business. And that's pretty exciting.
So again, I mentioned your tenure is roughly 6 years. Your lines of sight, I would think, have improved over time as you adopt technology or fine tune your dashboards or however you look into the business. Can you give us some sense of how that's perhaps evolved, how you've taken steps to, read the business better, how it's performing?
Oh, absolutely. I mean, when I first started, we were very much still in Excel files, access databases. I think that's how most organizations have been running is through Office products. And, of course, we still use those products, but we're very much in a much more real-time environment. So while in the past you would pull monthly reports and data, dump them into Excel and do some analytics, we have real-time dashboards now. We can look every single day at what's happening in our balance sheet. We can have transaction data on a real-time basis. Oh my gosh, last year when we were going through the banking crisis, we could see exactly who was wiring out funds and where on a real-time basis. So this would not have been the case 10 years ago. We would have been going, ooh, gosh, when are we going to get that data? And by that time, your customer's already taken action and walked out that door. So we're able to understand our customers in a much quicker real-time environment so that we can help support them in whatever they're trying to achieve. So finance has really changed over time just in terms of access, the speed, and even just the general efficiency of how we run. I don't need as many analysts doing this manual work anymore, pulling, analyzing on a lag basis. We can actually just have dashboards pull in data all the time, and I can quickly look and see what's happening to our financials on a real-time basis.
Well, as you moved towards that real-time data appearing on your dashboard, can you share with us what were the metrics or numbers you made a priority to make certain they're displayed? This is great, but couldn't we do this? And when could we have that become visible to us? Or I'm just curious how you educate the organization as well. Are there certain numbers that you're sharing more broadly, not just the finance team or the management team, but trying to help the whole organization move in the same direction?
Yeah, I think as a CFO, of course, I tend to lean towards financial management, but I think as a bank, banks are very much about balance sheet management. So most regular non-bank organizations tend to focus on P&L, income statements. But for us, it's really about loans and deposits. What are they doing every single day in their fluctuations? Because we need to understand how much is coming in, how much is going out on the balance sheet all the time so that, we can lend and we can gather deposits. And this is happening all day long in the fluctuation of our business. So, for me, that is something that I do communicate with our executive management team beyond finance. What's happening every single day to our balance sheet? Who's coming in? Who's going out? It's a couple $100 million. Is $1 billion going out the door? We need to know that. And we need to know why. So we're always in touch with our bankers and our management teams in terms of if large dollars are fluctuating, we need to understand this on a daily basis. It's really not sufficient to be looking and waiting to see what happens in a month.
You mentioned the financial crisis.
Here again, a financial crisis has sort of intersected your career. Last time you exited real estate, and here it is. You're a neighbor of Silicon Valley Bank, really.
But I mean, it had to have been an interesting week for you. It's We'd be very interested in hearing what unfolded in among your management team and the discussions you might have had.
Oh, sure. I mean, wow, what a ride that was. I mean, I think we were all shocked, to be honest, when the world was shocked when Silicon Valley went down. And then, shortly after we had First Republic. So, California was uniquely impacted beyond just the entire banking crisis. These were California banks and they were well regarded banks, and that both failed very quickly. And what we were doing is, luckily, because we have this real time information, we were on call all day, all the time, in touch with our customers to explain to them how we're different. Why are we not going to fail? Because you can imagine every customer is wondering, oh my gosh, do I need to move my funds to a too big to fail bank? What's going to happen to my bank? So we were very much in touch with our customers on an all-day basis to make sure that we reassured them we are very different. We have very granular deposits.
As the CFO, did that mean that I would imagine it was your bankers contacting you, asking you all sorts of questions, and you're sort of in the war room, inviting them on conference calls?
Or explain to us
what exactly was transpiring. I just have to believe you had quite a few conversations, people reaching out.
Very much about educating our bankers on the talking points of, what do we need to express? How do we reassure our customers that, this isn't going to happen to us and why? And there were some very savvy customers going through all the metrics saying, well, why Silicon Valley had this problem or First Republic had this problem. How are you different? Please explain to me why. So absolutely, we were jumping on calls with boards, with CFOs, CEOs, trying to explain to them, why we're not going to fail. And certainly this is a reciprocal relationship. Help us not fail because we're not going to fail. We are very different. But if all of you pull your funds out, you're going to also, support our failure. So let's get in on this together.
And what was the fundamental difference that protected you? What was the main reason you didn't fall victim
to what was something of a panic?
Right. And look, it comes down to kind of basics of business, which is diversification. We have always been diversified in our customer base, in our granularity of our deposits. And so, we didn't have this concentration towards any one particular product or segment or customer type. Whereas Silicon Valley, of course, had this, large customer base that was in the Silicon Valley area in tech and venture capital, and First Republic had a business model that was very specific and very long-term, cheaper mortgages to bring in affluent customers and get their ancillary business. We don't have concentrations like that. So we have this base of diversified lending and customers. So by nature, we're already very different from them. And that's really helped solidify that that's the right business model.
I have to imagine there was this groundswell of customer calls incoming to your bankers, and they're all on the front lines and they're, testing their crisis management skills or communication skills, really. Again, just a giant swell of activity over a period of a week, I would imagine, or maybe longer. Takeaways, something you learned, something that you would do differently next time. Maybe you're going to have communication seminars annually to confront these types of situations. Because again, you might have been, the bank's health might have been fine, but how do you deal with this groundswell of customers who are just casting doubt or, trying to get to the bottom of something?
Yeah, definitely. A couple of things come to mind, which I thought was really interesting. So I didn't realize that back in the day, remember when banks used to have huge lobbies, right? They had grand buildings. And the reason why banks were built with large lobbies is because you never wanted customers to think that there was a run on the bank. So you made sure that the line in your teller line was contained within your lobby, because if there was a line out the door, there would be fear that there's a run on the bank. So I didn't know this history until this crisis.
Me neither.
But I learned about it quickly. But we don't do that anymore, right? Like, well, our lobbies are much smaller. We want to be efficient. People are on tech. And what this crisis taught me, that you kind of always knew in the back of your head how incredibly transformative technology has been in our lives. But when you see people clicking on their phones and $1 billion go out the door in a second because they can click on their phones, right, and then they tweet to their friends that they're transferring $1 billion out, and how that spirals out of control in seconds, the concept of a run on the bank has become very different from people lining up in your bank to transferring on their phones when we're not even there to witness it. We couldn't even stop it if we tried, because it's not your customer lining up to your teller window trying to take money out. They're just clicking away on their phones and the money's gone. So, it really solidified how incredibly powerful technology is and how in tune we need to be with our customers on a much more frequent basis, because you aren't going to get the opportunity to talk to them before they're transferring funds out or leaving your bank. So that's one thing that has really been solidified from this crisis, is you really need to know your customer. You really need to be talking to them on a much more frequent basis. The other thing that I think was interesting is just solidifying that this diversification, while it leads to potentially slower growth because you're diversifying across industries, it's a marathon, not a sprint. And I think First Republic was playing the sprint. They were growing faster than any bank. We couldn't understand how they were growing at that pace, because we could tell, competing for pricing, that they were underpricing. I knew that these were unprofitable, because I would get questions from my bankers. Why can't you match this pricing? First Republic can do it. And I said, I don't know. They're losing money on this deal, and I'm not willing to do that. We can't go under by underpricing everything. We won't exist anymore. And lo and behold, that has had some truth to it, that you need a very disciplined model for your business. It's easy to get carried away looking at your competitors to say, look, how can we grow faster? How do we keep up? But you need to do it in a way that's prudent and well managed, even if that means that you're playing a longer game than just a sprint.
Excellent. Thank you for that. Would like to jump to our finance strategic moment question, which is when we just ask you to supply us with one moment of strategic insight you've had along the way. This might have happened way back during your real estate days. It might have happened last week, but what we're looking for is just one moment of strategic insight that you'd care to share with us. What comes to mind?
What comes to mind is, it's beyond a moment, but there's certainly been a transformation in my career as a CFO. So as you mentioned, I've been a CFO for 6 years. And what I realized in looking back at my career is that for the first probably half of it, I was analyzing my role in the financials as two sections of revenue management and expense management. How do we grow revenues, and how do we keep expenses contained? Pretty classic job of a CFO, right? And I looked at every expense line as a cost. This person costs X amount. Are they producing enough? Is this worth the cost? This building costs X amount, right? Everything is a cost. I started to manage a sales team about 4 years ago. So about 2 years into my tenure as a CFO, I have a product line that rolls up under me. And when I learned that business, it changed the way that I operated as a CFO to say, these aren't costs. Expenses aren't costs. They're actually investments. And if you look at your expenses as an investment over a cost, you start to think about this ROI concept of expenses. Like if I invest here, how much revenue will I generate in the future and how quickly will that come back? So I have a much more complete view as a CFO with that transformation and how I look at our P&L. And now I'm always asking the question, okay, if you want to spend that, what revenue will it generate? Whereas I think 5 or 6 years ago, I would have said, oh no, we can't spend that. This is our budget, right? So it's a very different view of, instead of planning to budget and trying to meet budget, okay, if we're going to exceed budget, are we going to be able to drive revenues beyond our budget with those funds? And if that's the case, it's worth it. So that's really the transformation I made. It's probably beyond a moment, but I can tell in the way that I view my financials, how I communicate to our bankers, that for me, it's been transformative to look beyond costs and say, let's invest in the business and let's try and grow this faster than we had planned.
CFOs and controllers, does expense management feel like a necessary evil? It's time to switch to Brex. Brex automates and accelerates spend management with easy-to-use corporate cards, travel, expense management, and bill pay, all on one AI-powered platform. Brex makes it easy to boost efficiency and compliance enterprise-wide and free up your managers, employees, and accounting team for higher impact work. Top companies from startups to enterprises are using Brex to automate manual work and transform their finance operations. We're talking DoorDash, Robinhood, Airtable, and countless other industry leaders. Ready to join them? Switch to AI-powered spend management at Brex.com.
So we're going to jump to our mentoring round now, where we'll ask you several quick questions intended to inform and inspire our future finance leaders. We're wondering, turn back the clock 6 years and you just stepped into the CFO role. Even though you observed it closely over time, there must have been something you wish someone had told you about the role or the responsibilities, or just how the position dictated more responsibilities. I don't know. Anything you would go back in time and tell yourself, something you wish someone told you?
Well, so if I go back 6 years, I had a 3-year-old daughter. I was pregnant with my second child, and I just got this CFO job. So there was a lot going on in my life at the time. I was amazed at how much I didn't know about the role when I stepped into it, and what an incredibly steep learning curve it was. But it was amazing. It was fascinating. There was so much to learn in the CFO role, even though I had been through all these different parts of the organization throughout my career and understood the business pretty well. Just profitability management, understanding how banks look at profitability and how interest rates impact our profitability. I didn't know in that much depth, how do banks make money at the end of the day? You kind of understand the business, particularly as a non-finance or accounting person. I had a lot to learn, but I wouldn't change any of it. Maybe the timing could have been better aligned with my personal life, but life doesn't work out that way. You take the opportunities when they come at you. You don't look back, and you run as hard as you can to make it work. And that's what I did. It was an incredible journey.
Chikako, we always like to ask our guests to reflect a little on the personal side. We're wondering if there's something many colleagues might not know about you, something from doesn't have to be maybe from the personal side, professional, early professional life. Don't know. Anything?
I'm quite open with my personal life. I think the one thing that always that people find interesting about me is that I did not aspire in my life for this kind of career. You know, my parents are immigrants. I was the first one born here. And this career is beyond my wildest imagination of what I thought my life would be. And people are always amazed that, like, oh, you didn't have this like goal, like you always wanted to be CFO, or you got here and you said, I'm aiming for that job. Because a lot of successful people do that. You know, they set out like, I'm going to be CEO one day, and they aim for it. And I didn't do that. You know, I just put my head down, I worked hard, and I just kept myself curious and hardworking. I'm interested. I'd like to learn something more, and we're going to work really hard to understand that role. And that's just how I operated without any specific, I want to be this when I grow up. And it's just, I think that fact that, you know, I didn't have this career trajectory planned out is always surprising to people that ask.
One of the things in your bio I thought was intrigued me was you got an MBA at the University of Amsterdam. Is that right?
Oh, I did. Yes.
And that was, I mean, did you relocate to Amsterdam and what have you? And
I did.
What you know, drew you there? What were you thinking at the time? And I imagine you might have been younger years, or no? Was it?
Oh, definitely younger years. I was a curious traveler.
Yeah.
So this is one of my meandering journeys, is simply that I wanted to experience the world, and I wanted to live in a different culture. And this was my avenue to get there. So as someone who, you know, didn't have this very specific career in mind, I wanted to kind of live my life to the fullest and experience a different culture and a different lifestyle, and really enjoyed doing that.
No, great. Kind of a surprise. Revealed your adventurous side to us.
What about would you have a book selection for us? It might be, or maybe just a resource, a podcast, something that you get information from, you think is informative, or maybe it's even something you escape with. Anything, a book or some resource that you rely on?
I actually have a podcast I listen to on a regular basis, and I can't say that about most things, but
That's good.
I actually enjoy this podcast called Plain English, and they break down just different phenomenons into a very simple layman's terms understanding of what's happening. And so I enjoy listening to that because it's 45 minutes and I learn something new every time. And then, of course, I kind of have these regular economic journals I read, you know, The Economist, Wall Street Journal, New York Times, to keep myself up to date. But Plain English is one that I just do for fun.
That's nice. Thank you for that. We haven't heard about it before, so we'll enjoy finding out more. So we are up to our final question, where we're going to ask you to look forward finally. And we want to know what your priorities are over the next 12 months as CFO. What would those be?
Yeah, 12 months is quite short in you know, kind of where I look. I think that what's changed over the last year is this banking crisis, and that has sharply kind of changed the way that I focus on needing to explain to our customers and even our employees the value and importance of regional community banks. I think too much has been focused on, well, why should I bank with you? I can bank with a too big to fail bank. And you really cannot get the same level of service and that connection with your financial partner. Your bank is your financial partner without community and regional banks. And it would be a real shame to lose this focus on, you know, why are we here? What is our value proposition? What do we do every day? And how are we different? So I've really changed my posture from just kind of financial management to being much more focused on this executive leadership of saying, look, we all need to be able to communicate our value proposition because we play a critical part of the economy. We support essentially what the US was founded on, which is this land of opportunity. People want to start small businesses. This is what we support. And we need to be able to communicate that value proposition. So that's what I've been focused on, and it's probably going to last more than 12 months. But the last crisis really kind of shifted our focus into let's make sure that we know why we're here.
Chikako Tyler, thank you for joining us on CFO Thought Leader.
Thanks so much for having me.
Hello, listeners. Jack here. I hope you've been enjoying some of our recent CFO Thought Leader episodes. To better serve you, we need your feedback. And our 2024 listener survey is now live. What do you like about CFO Thought Leader? What don't you like about CFO Thought Leader? This is what we call continuous improvement. We want to serve you better, but we can only do that by hearing from you. You'll find our 2024 survey right on the nav bar at cfothoughtleader.com. To demonstrate our gratitude, survey takers will receive a $10 savings coupon on the purchase of our new book, The CFO 500. Take the survey and the coupon is yours. Please help us serve you better. And as always, thank you for listening.